I'm Anton, and I'm a climatalist, and chances are you might be too. Climatalists sit at the intersection of business and nature. They want to play a key role in minimising the human-led impact on the environment, but they also understand the realities of living and working in a modern, capitalist world. Most importantly, they understand the central role that businesses can play in tackling the climate crisis. Ultimately, a climatalist believes that the future of profitable, good business can be equally profitable for the environment, but we've got a way to go before we get there. So if you too have pondered how we get to a future where clean, regenerative policy is embedded with profitable business models, the climatalist movement may just be for you. In this series, I'll be proving that climatalists are already out there leading the charge to marry their own good businesses with sustainable climate principles. This week, I'm talking to Creel Price. Creel is the co-founder of Investible, an early-stage venture capital firm focusing on funding the future of innovation and climate tech in Australia. He's also the CEO of Greenhouse, which is a climate tech co-working facility in Sydney that just so happens to be our base of operations at the Climatalist. I chat with Creel around what he looks for in a startup, the importance of entrepreneurship in climate tech, and the competitive advantage companies can gain if they view the costs associated with adopting green tech as an opportunity. Stay with us, and if you like the episode, please subscribe and follow Climatalist on all socials. Enjoy. Creel, welcome to Climatalist.
Thanks for having me.
Pleasure. So a lot of entrepreneurs have early stories of starting a business as kids. I didn't get going until I was at law school, but you started a lot earlier and it may have involved strawberries. Do you want to tell us a little bit about that?
Sure. I guess I could be what you might call a necessity entrepreneur. I wanted to get my hands on a new fandangled bit of technology called a Commodore 64 computer. And the farm was battling a pretty major drought at the time, and I found myself and my younger brother, we were doing one of those pick your own strawberry sort of setups at my grandmother's on the Central Coast, and we got this idea saying, well, why don't we grow strawberries? So we went back home to the farm in the central west of New South Wales and put in 500 strawberry plants and started selling them beside the highway.
Wow. How'd it go? Did you make it?
Yeah,
make enough?
Yeah, made enough for the Commodore 64, and then ended up raising the stakes the following year, put another 3,000 in, and I convinced the school bus driver Jeff that if they were picked and packed by 7:30 in the morning when we got the school bus, that he'd deliver them to all the shops around town while we're at school, which worked pretty well. And the following year, put another 4,000 in, and then so it ended up becoming quite a family-wide sort of business. And then, disaster struck like it often does in farming, and it all got a fungal disease, and that was the end of that.
Oh, no. So how old were you with that in the first round?
11.
Jeez. So by the time you were 13, you had 4,000 strawberry plants and you were distributing.
Well, 7,500.
7,500. Jeez.
Interestingly enough, fast track to today, I've actually returned to my roots, and we put 10,000 strawberry plants in last month actually in my farm, which is quite funny.
It's incredible. I have a lot of fond memories of strawberry picking in Russia, where I'm from. The family would go to a dacha where we all grew vegetables and fruit and things, and I was strawberry picking in the forest, mulled strawberries. So not quite entrepreneurship. I come from a communist background, so a little bit different. But the strawberries weren't the first business. You started 10 or 11 more businesses.
Yeah, that sort of came after the strawberries. So 11 was probably my first venture. And then by the time I left high school, I had another sort of 7 businesses and then another couple at university.
What do you think drove that entrepreneurship?
Well, I think the early taste of success, when we didn't really have a lot of money around the farm. So it was pretty good to make our own money, and we could buy some of our own things, but also contribute to the family finances. And it's sort of, I got a bit of a bug. I thought, this is something that I really, I wasn't the best at school, I wasn't the best at sport, but, it was okay. But entrepreneurship was one of those things that none of my other friends were doing, but I thought I was pretty good at it.
It's a very powerful thing when you can get that early success.
Sure.
So your primary venture that, I understand there was a big exit for, you started fairly young as well. Can you tell us about that company?
Yeah, so I left school. I went to university like a lot of people. I was a pretty poor student, partly because I had a landscaping business and a gardening business whilst I was at uni, so I didn't go to uni all that much, but got through with a pass grade. It was the worst employment time in the last 60 years in Australia, so found trying to hunt for a graduate job very difficult. But I did get this job with turns out quite an amazing company, HFC, which is an American finance company. They had quite a new model around existing customer sort of sales and marketing rather than sort of all new customer acquisition. So I worked there for a couple of years, and they were a meritocracy, which meant the best salesperson became the sales managers, the best sales managers became the state managers. And so, young age, 21, I was a state manager. So that was pretty cool. Or no, 24 by that stage, sorry, but started at 21. And then I went overseas for 12 months, and on my return, decided to go into business with one of my old finance colleagues, Trevor Folsom, and we threw $5,000 in each and started Blueprint Management Group.
And what was Blueprint Management?
Well, exactly. The reason I think we called it Blueprint Management Group was we didn't know exactly what business we wanted to be in. I'd read a biography of Richard Branson at the time, Losing My Virginity, and I thought we wanted to do the next Virgin Empire in Australia, and we didn't know what business it would be in. But Blueprint for us, the word was all about how do you come up with the formula for creating lots of different businesses and making them successful. But in the early days, I guess we replicated some of our work that we'd done in finance. So we really became this way of doing what became CRM. Even at the time, that term didn't even exist. But how do we work with the large banks and insurance companies on converting them from having one product per customer to how do we get 7 or 8 products per customer?
Wow. So kind of farming at scale.
Yeah, I guess you could say that, yeah. So it's trying to help them expand, and it was probably a bit naive in those days. A couple of 25-year-olds trying to do businesses with big banks. These days it's a no-brainer. Startups are young, and if you're got a few years on you, sometimes it's a barrier these days. But back in those days, when I was 25 when we started, I probably looked about 16. And it just wasn't easy to actually secure those type of huge clients to do what we were doing, which was quite they'd never really heard of.
What was your first one? How did you get in the door?
Well, we did a small bit of work with ANZ because a friend had worked there, and they sort of felt a bit sorry for us and gave us just like one bit of urgent work, and we did pretty well, but it was just not going to turn into a big contract. But our major client early on became Westpac, and we did did this big pitch to some of their executives, and they had enough faith in what we were doing, and it sort of started small, but they ended up being a 10-year client of ours, and we grew them to I think at the time they were the 11th biggest direct insurer in the country, and we helped them achieve being the third biggest.
God, that's incredible. So you're virtually telling big business how to do their job better, which is fascinating.
Yeah, well, they don't see it that way. And for startups, I think the trick is how do we make them look like heroes? So you don't actually work for a big company. You work for the person that's engaging you. So the people that engaged us, our job was how do we make them look good?
Fascinating. That's a great insight, I think, for a lot of people that are wanting to do business with enterprise. Did that continue on, that sort of large scale engagement, or did you distribute? Yeah,
no, we actually worked for 7 of the top 10 financial services institutions in the country. One of the only ones we didn't work with in those towards the end of that business was ANZ, and they ultimately were the acquirer of our business.
Wow! So you're potentially sharing something with them that they weren't competitively in the market with.
Correct. Yeah.
So you've gone from Blueprint Management Group into now the intersection of business, investment and climate action. What do you think led to that?
Well, I think we've always been, Trevor and I have been quite socially minded. When you're competing with super large multinational billion-dollar businesses, which is what we were a startup competing with these big ones, the only thing you've really got is company culture, and we cottoned on pretty early that people wanted to have purpose in their careers. So we did a huge amount of different charity sort of purpose-based programs within our business, and that really built the culture. And as you get a bit of success out of that, you go, well, let's do more and more. And really the catalyst to selling the business, for me, was actually how do I spend more of my time helping people use commerce for good rather than just trying to make more and more money myself, which turned out quite good timing because we sold the business just a week before the global financial crisis. So that was quite a lucky thing, as it turns out. People thought, well, you guys must be geniuses, but no, I think we were just quite lucky. But to get out before all that happened, and given at the time 90% of our business was financial services, we were pretty lucky.
God, timing's incredible. I started my business just at the start of the GFC. So I count myself lucky as starting at the start of the GFC because that's when the most interesting businesses are formed, I think.
Yeah, it often is, yeah. So, and then, well, I'd actually retired nearly 2 years before that. So I functionally wasn't involved in the business. But I did help through the sales process. But yeah, so during that time, I was sort of working on what I came to call the entrepreneurship. So how do we had the 15th century Renaissance was all around the architects and the artists and the sculptors and the poets, etc. I felt that the 21st century Renaissance would all be about entrepreneurship. How do we foster the Steve Jobs and the Mark Zuckerbergs, etc. So I was working on that pretty much full time even before we sold the business.
And you pursued that after the business?
Yeah, correct. Yeah, so really that's everything that I've done in business since. To answer your original question, I guess around the social cause and the climate, etc., has been around those pillars of saying, okay, how do you help more entrepreneurs get into business? How do we inspire even kids and university students to actually start their own business? So I've done quite a few initiatives around that. And then how do you actually have the finance to actually fund some of these amazing innovations and take them to the world?
That's a good pivot point for us to have a chat about, or to chat about Investible. What prompted you and Trevor to start Investible?
Yeah, it probably wasn't as planned as you would expect from a couple of people who thought they were quite good business people. So we were, we retired from business. We got obviously some really great payouts, which was really amazing. And when your business success becomes quite public knowledge, people approach you and go, "Oh, I've got the best idea in the world," and you have to, you do reject a lot of the opportunities. But we started to find some good ones, and we invested. And probably Trevor, to be fair, was probably the more of the investor at that stage. And then he'd hit me up saying, "Oh, Creel, you got to get in this one. This is really great," and we'd invest And then, so we had probably about 12 or 14 businesses we'd invested in, and then we found ourselves together on a trade mission to Israel, the startup nation. This is back in probably 2013. So we sort of got together and go, Australia really needs more support for innovation and we need more VCs, etc. So we decided that, we either obviously had to stop investing ourselves because it was becoming quite high maintenance to look after these startups. So we had to set a business up to do exactly that. And at that stage, I'd been doing a huge amount of training in Australia and around the world on entrepreneurship. So we decided to combine our efforts again. So Trevor on the investment front and myself on the entrepreneur development front, and that's what became Investible.
Wow. What did you learn in Israel about startups?
Well, firstly, I think that the government needs to play a part. They were very instrumental in actually helping the innovation ecosystem over there. That the corporates, some of the big companies like Intel was probably one of the first to really lean into Israel, can play a part. But lastly, you've got to have the capital in order to be able to help those startups get the first start, but through that valley of death, which is probably one of the still really to this day is one of the hardest parts to get through for startups. Yeah,
we were looking for funding in 2010, 2011. It was very, very hard to find in Australia at that time.
Sure. Yeah. And there'd been, the venture capital industry had been here for quite a long time, but a lot of it had sort of emerged from the private equity. And it's a different sort of risk profile. Private equity is, how to get in and out, and that sort of the term sheets are a little bit restrictive for real innovation. And so I'd lived a time in Silicon Valley as well, and wanted to bring some ethos from the Valley. And they, really great at risk capital over there as they are in Israel. So so that's really what we aim to bring to Australia. And I think we've done a pretty good job at being one of the first very early stage investors. A lot of the very successful VCs that are known in Australia are, probably that next stage up. And in fact, we didn't call ourselves a venture capital business for, a long time. We always thought we were pre-venture capital.
Like a seed?
Yeah.
What's now known as seed?
What's now known as seed, yeah. At the time, seed, the word didn't exist. In fact, we started when the word startup didn't exist.
So from Israel, you brought, and that's an interesting story. From Israel, you brought the idea of capital. What did you bring across from Silicon Valley?
Oh, I think that the importance of leaning in, particularly the successful entrepreneurs. I was fortunate to be exposed to Tim Draper and his Entrepreneur University and that sort of stuff. But he'd get some people to come in and talk about their companies, and it'd have Elon Musk come, and you go, wow, how do you get access to that? But I think people like Elon and Steve Jobs and those people recognise that the people that have supported them, they've got to lean back in to support the next versions of entrepreneurs that are coming through. And I think Australia really is starting to do that in a big way these days. But back in those early days, it was a bit different.
It's kind of interesting. Something that I took over from law was, lawyers are incredibly good at mentoring the next level down, the next generation down. When you're a startup founder, you're completely alone.
Yeah, very alone.
And how does Investible help with that?
Well, it's been evolved over the years, frankly. When we first started, probably 30% of our business was investment and 70% was exactly that. How do we actually not only mentor people, but I was all about scale, right? So you can't, my time is pretty valuable, and you can't, how many startups can you actually really have an impact on? And so I created all of these programs that you could actually do it at scale. So some online programs, some bigger event programs, some, when you found the really successful ones, how do you actually, do more of these circle groups of masterminds of 10 or 12 people? And then also, how do you do that in a fly-in situation? Because one of our missions with Investible was how do we actually be instrumental in Southeast Asia. We didn't want to go and move to Singapore or Indonesia, but we could still run programs over there, and that's what a big part of our focus was.
And Singapore's on the cards now in the mix for actually. Let's turn to that in a sec. But let's shift to Greenhouse. How did the experience of building Investible spark the concept for a climate tech hub?
Yeah, well, back to that social mission, I guess we've always had is, one of the enduring challenges of our time is the need for climate action. So, I think that's definitely part of who we are, and we're acknowledge of it, but certainly didn't come into it as any experts by any means. But where we did have quite a bit of exposure is through our deal flow at Investible. So we look at, 4,000 or 5,000 companies a year. Okay, so that's a lot of companies to actually look through, and, generally maybe 1% get funding. But there were some really amazing technologies coming through in the climate space, and more. Every year we saw more and more and more, but with very science-based founders. And that's very difficult in a typical agnostic fund, which Investible was at that point in time, to invest in, a scientist. You're looking for the commercial acumen that they can, build a business, and you could raise the next amount of money, and, maybe there's going to be a liquidity event in 7 years. But we recognise that that's, not great for the country, not great for the climate, but equally not great for investors. Investors should get exposure to something that could be much bigger and much more enduring, even though it might take a bit more patient capital. And might need the investor itself might need to be a little bit more hands-on. And that's where, by that stage, a lot of our programs, we didn't need to be as hands-on as we did in the early days because, the Australian startup ecosystem has got so many different parts. There's so much support. More government support, more incubators and accelerators and co-working spaces. It sort of didn't need us as much in that space. That's why we were really doing much more of it in Southeast Asia, where they did need us. And then we thought on the climate front, now they need us again. So that's what the real catalyst for doing what we're doing at Greenhouse on the climate focus is exactly that.
So you're taking your entrepreneurship and rolling it through the climate sector.
Yeah, that's what we'd like to think so. Yeah.
So entrepreneurship, like I was a takeovers lawyer, a big believer in the power of business when it's aligned right, incentives are aligned right to make incredible change. Tell me about entrepreneurship and climate. What do you think? What impact do you think it can have? Why entrepreneurship and not science or government specifically?
Yeah, I mean, all of those, it's not either or. I think you need the science to be able to commercialise, right? So, but it takes an entrepreneur, like a lot of those innovators, we've mentioned Elon Musk before, and again, Elon can be not everyone's cup of tea, but as far as an entrepreneur case study, it's just pretty incredible what someone with the vision, but also the drive, and that's where the entrepreneur comes in to make things happen. What he's achieved in the electric car industry, very few other people could have ever done. In fact, he came in late to the party, really, in some ways of taking over that business. He's done the similar things in solar. He's done the similar things in space. And I think that's what we really need in climate, is not only commercialising some of the innovations that already exist, but it's that new thinking and bringing things back to the base level and saying, okay, what do we really need? What could, it's not let's build a product that we think the consumers or the corporates need. Let's build something that we know they need, so a product that's not looking for a solution, not looking for a problem, that we look at the problem first and we go out there and we solve it and we scale it. That's what the entrepreneur brings.
And that the element of scale, I suppose, as well, right? So the right amount of money at the beginning, and that might be where Investible is.
Yeah, and not too much money. I mean, sometimes, one thing you asked about my learnings from Silicon Valley, one of the things, I think it's too much money. It was just like, in Australia, where a company similar size might raise $1 million, in the Valley it might have been $20 million. And they, build a beautiful office, and they have huge amounts of layers of management, and they haven't even got a product ready to scale at that point in time. And I think, that's one thing that I think we're always mindful of as Investible, is it's an appropriate amount of funding at the appropriate time until you go through the various gates of proof of concept.
This investment philosophy in VC is interesting. I recently sat at a panel of US VCs in the climate sector, specialist VCs, deep tech, who talked about killing the baby turtles. There's still the same investment philosophy. We're going to throw hundreds of millions of dollars at these things, and only the strong will survive. And then I talked to a VC in New Zealand who takes a very different approach. That climate tech VC, they want every one of their portfolio to succeed, and they're very selective in terms of who they bring into their portfolio. Where do you sit on that spectrum, and how does Investible fit in?
Yeah, fairly in the middle, I guess. So, for our funds, we generally aim to get 40 to 50 companies deployed per fund. And the main reason we do that is we want to diversify the risk between different technologies, different founders, different vintages, different sectors, different countries, right? So that's where you get that real capital protection for our investors. But equally, we don't think that those 50 companies are all going to be successful. So you're really looking for, 3, 4 that are going to be absolute standouts, and then maybe another 10 that are going to, give you some money back plus some. So we're not, because otherwise, I think if you only invest in things that are without risk, you're not going to find the gold in there. So I guess we're somewhere between a Silicon Valley type of spray and pray at the early stage, and what you described there in New Zealand, trying to get everyone to be a winner. But that said, I think we're still sitting at less than 15% of our portfolio has failed. We've invested in over 160 businesses. So in my mind, I think we probably haven't been risk enough. We haven't taken on enough risk on those figures. But, we're a little bit spoiled for choice. We look at 120 to 30 deals per every one we invest in. So that's why we're quite fortunate that there's a lot of deal flow.
You poor investment managers. There's a lot of due diligence to do.
Yeah, and we have a big team to support that, which is very unusual at our stage. The reason why in Silicon Valley I guess they do this spray and pray is they go, it's no due diligence, it's no, just give them a start, and then if they prove us on that, we'll give them the next amount of money. But we, being specialists at the seed stage, we wanted to prove a model that we could bring some later stage VC thinking to the early stage and do it at scale. That's what I guess I bring to the party. Whilst not necessarily being the world's best investor, I wanted to make sure that I could bring the entrepreneurial systems thinking to something that was more of a Midas touch in the past. You get the genius investor, and then they're always going to be right, but if they leave the fund, the returns disappear. Whereas what we've built is an absolute system and machine that is very sustainable regardless of the people on the investment committee.
So in terms of Greenhouse, were there any specific investments that you encountered in your time in Investible that really made you think climate is it, or was it more of a thing?
Well, I think it's a trend. I mean, there's lots of different industries in climate, and climate is quite broad. We're not looking for just carbon removal type of things, which is very much in the space. It's things in transport, and through Investible, we'd invested in quite a few transport things, including electric car company, AEV out of Australia. There's things in ag. We probably weren't doing enough in ag, but we saw that coming through. And again, that was quite a harder thing for the agnostic fund to invest in, whereas that was very much in the climate space, and as is food. And then smart cities. I think there's, as technology developed, there's some really amazing things in IoT with smart cities and that sort of side. So I think that was a really good area. And then I've had a personal passion for AI for a long time, and then all of a sudden it's not just hardware that's the potential in climate. All of a sudden it can be software as well.
Or in our case, information. There's an enormous landscape with AI. It's fascinating. So Greenhouse launched in a fairly unique way. You partnered with the City of Sydney to secure a prime location here, which we're very happy to be a tenant in. Can you tell us more about the collaboration and the city's commitment to climate?
Yeah, it came about, it was driven by the city in the first instance. They were fortunate to get an opportunity to be in this Salesforce tower with 3 floors from the builder, that they needed to do something around technology. And we'd been working with the city for 2 or 3 years, and we were in the consultation process about what should they do with the space. And we were encouraging them, saying, look, there's plenty of support for startups. We need to do something more for deep tech, and we need to do something more for helping companies scale to Southeast Asia. And secondly, it should be a little bit more about the scale-ups rather than just the startups. So that was the feedback came out, and they went to tender. And we weren't even going to tender, to be honest. And they encouraged us to do, which we did, and we were fortunate to win that tender. And then it was only a third of our approach was going to be based on climate. And then over the next 12 months, we were able to get them to agree that we would focus 100%, because we felt that it's a little bit diluted if you're focusing on 3 different areas. But if you package it all into one theme, which is for us was climate technology, it'll be a lot more powerful, and that's sort of proven out.
The community here is incredible. What do you think fosters that in the space?
Well, first of all, you've got lots of different stakeholder groups that we're mindful to be. It's not just startups. If it's just startups, it's like anyone else. We need to get it involved from governments and universities, large organisations, the social sector, and in climate. There's a lot of really amazing not-for-profit organisations that are leaning in to make a difference. And then, of course, the investor side of things, which we have always had some great connections. And Investible is certainly one of the tenants in here, but I think there's another 7 venture capital companies that have housed themselves in Greenhouse, which is great. We've always, it's feels a bit weird to have think about competitive things, but certainly at the seed stage, we've always wanted more investors at the seed stage. Because we'll ride a third of the round, but we're always looking around for other investors who can actually fill out this other. So similar thing in climate. The more climate investors we have partnering alongside us, I think the better.
That's something interesting I found in climate is the community seems to be a lot less hard competitive and a lot more open. Why do you think that is? Well,
I mean, climate doesn't have borders, does it? So, to fix the climate, I think it's a global thing, and it's not any one business that's going to take home the prize. And I think those that are only doing it for financial gain, I think will probably, get taken over by some initiatives that have, got purpose at the centre of what they do as well. But equally, when, we don't invest in charities, we're looking for businesses that are going to be successful and scale and both from a returns point of view, but also we'll never be proud of what we've done if the companies that we invest in don't go and have their technologies adopted in a big way that reduce emissions.
So on that point of purpose and impact, Greenhouse is built around that premise. So how do you measure success? What economic, environmental, ecosystem benefits do you look for, and what do you think you've hit so far?
Well, it's early days. I mean, we really, whilst it's been 5.5 years in the making, Greenhouse, that's why I'm sitting here grayer today than I was when we started. It's been a pretty tough process, frankly, to achieve getting the doors open, right, in October last year. And so in a bit over 6 months since then, I think we've achieved a huge amount on quite a few different fronts. So if you look at just the co-working side of things, we only opened 2 floors initially, and now we've just opened the 3rd floor. We're pretty close to capacity, and there's a little bit more room, but it's a pretty fast growth compared to what's going on with a lot of other co-working spaces. So I think that validates, get the right community and the right space, and don't price it out of the range of early stage companies. So I think we've done a great job on that front. And then delivering for our members, how do we lean in and give them introductions, or give them programs, or give them even just simple things like getting them to meet other people in the space. And it's amazing some of the things that have kicked on from that, which has been great. And then the other 2 areas of our business is what we're doing globally with our challenge platform, and we've had some great success working with the World Economic Forum on this new Zero Green Steel Challenge. And that's been 12 months in the making, and the report was recently released. So we did essentially a global search to find both the steel technologies that could create near zero green steel, and then how do we find the steel operators that are prepared to adopt it, And then how do we find the demand? How do we look for the corporates that would, if there was green steel, would they be prepared to pay a premium? And that's been a pretty successful program.
That's fascinating. We had Tim Buckley on the program last week, and he talked a lot about the green steel opportunity and how some miners in Australia invested ahead of demand and didn't really get that customer base. Did the challenge secure a customer base for the product?
Yeah, I can't remember how many billions of dollars of steel demand we've been able to shore up, but I think it gives those investors and those technologies and the companies that are the steel manufacturers that are going to adopt it more confidence than just having a wing and a prayer, which was really part of the challenge that we're trying to achieve.
Amazing. So just to explicate the challenge platform, what is it that you're so that's an example, green steel. What is the challenge platform about?
Well, essentially, it's came from Mark Rowland, who's been involved with me in Greenhouse now for the last couple of years, and he brought some really amazing, thought-provoking ideas from his work in the US, working for particularly large government departments around through their tender processes. How can they make it a lot more transparent? And that's even when they go to tender, but even before they go to tender, trying to work out the problem statements and making that a little bit more open and transparent around, okay, what are the things they're looking for? Because otherwise, we talked before about, startups developing, solutions looking for a problem. If you do it the other way around, find out what the big corporates or the big governments are going to actually pay something for, and then it's a great opportunity for startups to lean in and go, wow, they really want that. Let's give them what they need. And that's what essentially the platform does. And we've had some great support from the New South Wales government to help us build that platform to where it is today. But it just means that it's really transparent, that people can actually see, rather than a closed tender process or a closed challenge, you can actually see what other people are actually doing around the world.
And it's not, as I understand it, it's not just large corporates that are tendering for this work. It's startups. It's businesses coming together for the specific challenge. Yeah,
well, we certainly specify on that front the technology. So whether it's startups that have got the technology or large organisations that have got the technology, overseas companies that have got the technology. I mean, you don't want to keep replicating, and startups often make that mistake. They go, oh, we're the only ones in Australia doing this, and we go, well, they've been doing it in Poland now for the last 20 years. Shouldn't we go and just use their technology if it's proven? So and I think climate, it's pretty important that we don't have too much duplication on that front. Just because it sounds like a good idea, let's find out where's the best of breed technology coming from.
So specialise and scale up from there.
Yeah, and also, how do we give Australian startups an opportunity that have got great tech that no one else in the world has actually got access to?
Yeah, so there's an interesting story about Australia. Someone here at a university here came up with a concept for the solar panel, and then it was commercialised in China. Is that part of the solve, that you're trying to take that early stage deep tech innovation and then allow us to scale it here in Australia? Well,
I think the problem with the solar side of things is the lack of commercialisation, scale, funding, really. You go to, the US Inflation Act has really taken a lot of wind out of sails from other countries, including Australia, because there's just so much money over there in that sort of renewable space. But fortunately, the government is making some moves in that direction, which has been great. And I think it's really important that if you have, if a country like Australia has discovered some technology, how do we keep it, Australian owned and Australian supported and Australian funded as long as possible? And that's certainly one of Greenhouse's missions, is how do we be a champion of bringing more and more funding into this space?
So from your vantage point, on that topic of technology, what areas of climate tech in Australia seem to be the most promising? Are there any sectors where you see significant potential?
Yeah, I mean, Australia punches above its weight when it comes to agriculture. And so I think, being a broad acre particularly, there's some really amazing technologies that I think could actually make what's been fairly people intensive, so therefore uncompetitive, all of a sudden comes back into play with AI and other types of technology. So I think that's really great. And because, a big emitter, of course, is the transport of food all around the world, the spoilage, the herbicides, and, it's a really big polluting industry. So I think there's some really easy wins in that field, that we don't need to invent any new technology. There's enough already now that if we adopted on a wide scale basis, that we'd get some really amazing emission reductions. I really like the transport space. And again, big emitter, the construction space, doing some great stuff in cement, as an example. One of our portfolio companies in Investible has just built this amazing AI that it can actually design infinite number of building designs and have them costed and checked against structural integrity regulations to optimise how much concrete you actually use in a building, and they generally reduce it by about 20%, which is just phenomenal for two reasons. It reduces emissions, but secondly, it means that it's more easily adopted, because a lot of green technologies, you've got to pay a premium. Whereas, you bring this technology into your company and you can save 20% of your concrete costs.
Is that true that this green premium concept, you've got solar and storage, which is just recently over the last few years dropped below coal power. Is it true that there's a green premium?
Well, there's a premium full stop on technology adoption. Sometimes it takes years and years before you actually get a payback. And those early adopters are at the bleeding edge. There's so many disaster stories where, the company couldn't scale or just the technology didn't work as they thought. So, there's always risk in adopting new technologies. But green premium, I think there should be preparedness to pay a green premium if it's going to reduce your emissions. Does that mean it's going to affect your bottom line negatively? I don't think so. I think over time, consumers are going to actually be prepared to pay a premium for your products and services, so therefore it's a win-win all around. And certainly those dirty industries that aren't adopting green technologies, may fade out of existence. So, they've got a vested interest to do it. So sounds like a premium maybe on the cost, but there's a bigger cost for your business if you don't.
Yeah, it's interesting. I guess you're thinking about cost, not necessarily opportunity cost.
Correct.
That's the first time I've heard that position, that the green premium is a premium you pay for competitive advantage. Really powerful way of expressing it. So from an investor's perspective, what are some of the key factors you look for in a promising climate tech startup?
Well, it's very similar to what we, so in order to be in the climate tech portfolio, that there has to be a demonstrable emissions reduction if this technology was adopted, right? So we have to tick that, and there has to be a preparedness of the startup to actually report such. The reporting is important. It's one thing to say that if this technology was adopted, but are you prepared to report on it on a monthly or quarterly basis so we can actually see the impact it's actually having?
It's accountability.
Yeah. So once you've ticked those boxes and it fits in the 7 verticals that we look at, you're now a climate tech, and then we look at those climate technologies exactly like we would look at any other startup through the Investible process, and we've built this what's called the Investibility Index, and there's 16 different things that we actually look at when we're doing our due diligence around a startup.
So a whole checklist.
Founders right in the middle. I mean, if you don't invest in great people, you're hiding to nothing. And then outside of that, there's things like business model and competition, industry, etc.
Is there a personality track that you look at on the founder side?
Sort of.
Slightly neurotic, maybe.
Yeah, I mean, there's a program. We invested in an amazing startup called Fingerprint for Success, and we've been through the journey and helping Michelle build her technology. But essentially, FRS, as it's called, looks at 48 attitudes and motivations of founders and compares them to the standard population. So there's actually a real trend on what are the things that we're looking for in that process. So yeah, so everyone who gets funding for us needs to go through the
personality test. That's amazing.
Yeah. So attitudes and motivation, because the good thing about attitudes and motivations, it can change over time, right? Personality is sort of stuck with it. So we're looking for some of those triggers, but equally we look at it not just as an individual. We over-index by investing into founder teams. So how do we make sure that we've got the perfect entrepreneurs through the 2 or 3 people that we're investing in as well? And how do we make sure, using this tool, there's not going to be some terminal conflict? And that it really picks that up pretty quickly.
Wow. So how do you have that conversation with a founder? Like you stack, but you don't stack on the team side, or is it are you augmenting with a new team member? Like how do you counsel them on that?
Sometimes it happens. I mean, we're more than happy to invest in many solo entrepreneurs as we have, but it can be a lot riskier as an investor, because if that person gets hit by a bus, the business is finished. Right. Whereas if you've got a founder team, as the business grows, it's easier for the people to grow into the role oftentimes. But we're certainly not exclusively founder teams, but I've found that it's sometimes easier to move move up. Sometimes if people's vision for the business changes, one founder might move out, another one might move in, or if it's a single founder, they might bring on a founder team to actually help them go to the next level.
Got it. Something that strikes me about, or my operating theory about climate startups that seem to be succeeding dramatically is that many of them are platform businesses, so they enable other businesses to transition. Is that something that you look for?
I don't love the platform businesses because, like as far as a climate warrior goes, you want to find out things that are actually at the coalface that are this technology if adopted. So, carbon credits as an example sounds great, but it's only in and of itself, it's not a climate action. So some platforms we've invested in, that's great, but I wouldn't want to have a whole portfolio that are absent of any deep tech or hard tech.
So there's a new initiative that you are looking at, which is missions, and you're targeting AI, nature, and green finance. Is there more that you can share about this publicly and why these focuses are crucial for addressing climate change?
Yeah, I think it's a bit early days. We're just working with a few partners now around putting this together, but we've recognised that greenhouse, we're self-funding. We need to bring in capital and we need to find out what are the themes that are really important for companies at that point in time for them to lean in. What are their sustainability goals and how can we help them achieve those sustainability goals? And so we've picked the 3 themes initially, but we believe over the next 10 years, there will be numerous themes that we'll have to pivot towards. Some of them we don't even exist today, but those 3 I think are pretty important for a lot of companies right now. And particularly in Australia, the nature positive side of things, I think, there's been a huge amount of awareness created originally from the Black Friday fires or whatever it might have been. And I think there's a real sense that the customers of corporates, the employees of corporates want to do something a lot more around nature. AI is one of the other themes. I was the chair for quite some time of the B Team's AI Coalition, so I had a front row seat to 10 of Australia's largest corporations, the CEOs. They leaned in and we shared some of the things, the opportunities and threats that AI existed. So it was a real fascination to find out, okay, AI is coming in a bigger way than anyone's ever thought, and I think it'll come in a big way in climate. So I think that's a great theme and something that certainly one of our partners, Salesforce, has really leaned in towards, which is great. And then the green finance side of things, it's inevitable. We need funding, and we need a new educated investor base in order to say why this is not just a flash in the pan. That climate investing is going to be important for the next 50 years. So how do we actually get both international funding and domestic funding to actually really treat this as an important part of the mix?
Yeah, I think we're wildly aligned on that. This point on funding, so we have government funding, we have VC funding, we have growth stage funding, we have PE. Is that not enough in the climate sector? Like, what is the big bulk of funding that we need to drive the transition?
Well, just as an example of something that's missing in the gap, I think that we've seen with our own portfolio, you invest in them as technologists and scientists, and they're building their technology and they're getting some early adoption, and they go, now we need a massive plant. And they go, okay, the plant's going to cost $200 million. And we go, well, venture funding is not going to do that for you because, your last round was raising $3 million. You're not going to move to now raise $300 million. So that's where that sort of mezzanine capital or debt-based financing comes into play. And I think it's still a little bit, the VC industry and the debt industry aren't playing together well enough. And I think if there's a mission for us is how do we bring in some of that infrastructure funding at the right time, I think is going to be pretty important.
Why do you think debt and mezz is not moving into the sector given the scale of the opportunity?
Oh, it certainly is moving into the sector, but it's probably not moving in fast enough and early enough. They're waiting for proven companies with proven profit profiles in order to be able to provide them the debt. But certainly at the more scale-up stage, the startup is still in loss mode. It's very difficult to achieve that finance.
Have you seen startups take any action to try and reduce the risk of their plants, say offtake agreements or other things to try and?
Yeah, well, that's certainly one things we encourage them to do, and large brands on your take. But it's sometimes hard for those companies that are often publicly listed companies in order to be able to sign a long offtake agreement with a company that's quite new and technology that's still being proven, right? So they'll give a memorandum of understanding, but it might not really contract them. So that the debt provider needs to be more comfortable dealing with those type of instruments.
So who do you see coming into that market? Like you're at the coalface of this stuff, both as an investor and in terms of your contribution in the Australian business community. Who could step into this? Is Super a candidate?
Well, Super should absolutely be a candidate. I mean, it just doesn't make any sense to have these industry funds that are all about their employees that contribute and not be building the companies of the future that are going to be their employers, right? It just, it doesn't make any sense at all. So I think super funds certainly, we're lucky with some government-supported funding agencies like ARENA and the CFC. So they make it a little bit more attractive for co-investors, which I think is great. But equally, just in the normal banks and the merchant banks, how do we actually create products that are attractive to customers of theirs that are going to generate a good return? And I think that's where a lot of thinking needs to come in, because I think there's definitely demand for it, because family offices and other investors, there's a conscious investing happening at the moment. And, I think that's where things are going to end. And certainly, as there's a bit more proof that returns exist there. But if I look at our agnostic portfolio and our climate tech portfolio, I honestly think the climate one is probably going to be, equally successful, if not more so, just because of the winds of, change coming behind it. Yeah.
So do you think that private wealth, so wealthy families or family offices are going to come in and solve for some of this?
They're not going to solve, but if the right companies are behind the right product development with the right profile, I think they'll consider it investing. So they're not going to be a solution, but they might be an investor.
Talking to corporate, so the missions piece is trying to connect Greenhouse and its community into the corporate sector to enable some of these sustainability goals that the corporates are looking for. Profitability and sustainability, we talked about just before about the opportunity cost of not investing. Is there a link or an example that you can point to, or a couple of examples around sustainability and long-term growth for established businesses?
Well, the first thing that came to mind was really a little bit of what Finland's done around becoming, the standout when it comes, or it might be Denmark, around the wind. It was a very new technology when they really got behind it, but now it's a global export opportunity. It's really been the making of their economy, right? And I think there's examples of those in Australia, and it should have been solar panels, as you pointed out before, would have been one of those. There's going to be other, potential opportunities in this sort of field where the government needs to get behind in a bigger way, and the big funders need to get behind, because it could be a nation-building, program that all of a sudden, we wake up in 20 or 30 years and 20% of our GDP is coming from that particular sector.
It's interesting you mentioned Finland. I'm not sure if it was Finnish or Norwegian. There was an oil company called Dong, which I think is now called something else, and they divested of all of their oil and gas assets and became a wind generator. But a number of years later, their share price has dropped because wind energy has dissipated a bit. So it is interesting that there's a lot of movement forwards. But at the same time, it has risks. I
saw a documentary recently on a plane. I've just struggled to find the name. I think it's Breakthrough or something along those lines, about a carpet tile company out of the US. And they set some very aggressive emissions. How could they create a carpet tile that was zero emissions, which was nearly impossible at the time. But over 20 years, it's just shown how they've been able to achieve it. But now that they're the undisputed leader, they're making more profit. They've created more shareholder value than if they had just been completely polluting. So it's been a really great case study, and we need to do that in 1,000 different products or 1,000 different industries for us, all to have a sustainable, livable planet.
It's complex, isn't it? There's a particularly when you're dealing with large corporate, there's a whole complex of issues that need to be solved for. Is it slow and steady wins the race? Is that or is it a rapid transition? Well,
traditionally it's been slow and steady, definitely, but we can't afford slow and steady. So the large organisations, and again, as I mentioned before, it's not a big company that you're dealing with. It's an individual, but I think the CEOs have to really lean in. The boards have to lean in and saying, look, that speed of transition is not fast enough. How can we do more? And that's what was different with this carpet tile company, is it was still a privately owned company, even though it was an enormous global concern. The founder was able to really push that they need to do things faster and faster and faster. And if people weren't prepared to actually do it, they had to go and find a job somewhere else, right? And I think that's the sort of urgency that we need to bring into corporations, selfishly as much as for the planet, because if they don't, I really see a time in the future that companies that are left behind, or there's an expose on a newspaper or in a TV program about their unsustainable practices, could put them out of business within years.
Yeah, there's a big risk, I suppose, a big and emerging risk. So there's frequently a conversation point around this. So boards think about profits in the next quarter and the next year, but if you progress, I guess project forward a couple of years, what's the risk?
Correct. Yeah, the massive risk. I mean, it's the answer. Everyone needs to think we could be in an answer situation. I think they initially with some of their maintenance, it started as a little bit of an expose and then it became bigger, and then a couple of years later they're out of business. We don't want that to happen to a lot of our large organisations, and AI certainly as much as the opportunity exists for some amazing productivity growth, it equally can put you out of business pretty quick if somewhere in China or somewhere in the US is just doing it better, faster, quicker. So I think we really need to adopt technology faster than we are.
Yeah, there's a saying that you go broke very slowly and then very suddenly. So that should be a warning for all of us.
Sure.
Okay, so let's pivot back to Greenhouse. So you aim to be more than just a physical hub. There's this real push behind building a thriving community driven around climate action. Beyond the missions, what are your ambitions for scaling Greenhouse's impact?
Well, I think initially it was Australian centric, and whilst Greenhouse is based in Sydney, we see it very much as Australia's climate tech hub, we've been approached by quite a few cities saying, well, we need a greenhouse in our city. We're probably not quite there yet. We're still solving the formula of how we create what we've created here and how do we sustain it. But pretty soon, I think we'll see some other greenhouses emerge, whether in partnership or we do it ourselves in other parts of Australia and around the world.
Nature plays the thinking about the climate investment purpose, the strawberry farms. There's a real social movement around this. So you're impacting your family, or you're impacting investors in a positive way. What role does nature play in your thinking around climate?
Well, I think it's just a good reminder of why we want to save it. I mean, how I came, I mentioned before around how we went from a third of the greenhouse being on climate to 100% of it. Actually, the catalyst for me was reading a book by Sarah Wilson on climate change while sitting in a cave down in one of the national parks south of Sydney. And I was reading this book, and I'm in this beautiful, amazing, World Heritage place, and I thought, we've got to do more. And that was the catalyst. And I think the more people spend with nature, the more likely they are to make some brave but important decisions. And equally, all of the stats around habitat loss, around species loss. I think really reminding ourselves that this where humans are only one aspect of the environment. I think is pretty important, because we have to save it for not just the human race, but for all species.
Final question. So what opportunity, and this is one I ask every guest, what opportunity do you think is being left on the table by business investors or the founder community? What do you think is sort of being missed at the moment in the sector?
Oh, interesting. We're sort of charging along with all the things that we know are missing, rather than I guess. If I thought about it, it's really around collaboration. I think what I've seen in some situations with large organisations, it's always about how do we get a win out of this at our expense of our competitors, or we don't deal with government, we do it ourselves, or we don't deal with startups, or we'll have our in-house tech team. I think the time has come that we can't do it all on our own, and I think there's got to be a recognition that. By everyone leaning in, you end up going to benefit out of it. But how do we create those partnerships? A great friend of mine, Jean Irwang, the founder and chairman now of Virgin Unite, she wrote an amazing book called Partnering, and she talks about how do you create those really deep and successful partnerships with varied stakeholder groups. And she's just, through her career that I've been very fortunate to have us, being able to observe and been in plenty of meetings with her. It's just an amazing methodology. So really, great podcast that she's on as well about the book. But I really recommend people to adopt that type of let's lean in rather than work out how do we compete, how do we collaborate, I think is what's missing.
Working together, a lot of symbiosis. Thank you, Creel.
Pleasure.
Once again, if you like listening today, then please subscribe to The Climatalist wherever you get your podcasts and give us a follow on Instagram where we're just Climatalist. I'm Anton. Thanks for listening.